we're looking at plans for the future, plans for this year, 2025. Our guest is here and seated this hour, and he is the head of investments and financial fitness at Stanbic Bank Kenya, Gathinji. Good morning to you.
Good morning, and thank you very much for having me. Excited at being part of Kenya's biggest conversation.
So, Kingori, thank you for being here this morning, and I'm going to welcome you to the Situation Room. Before we even get into this conversation, CT goes around the continent, and he goes to a different African country every week, and he comes back with a basket of proverbs. And this week, he's going to welcome you, rather today, with today's proverb, and you can tell us what you think about it and how you would interpret that, right?
Okay, let me just ask a simple question. And the question comes in the form of a hint as to where this country actually is, okay? It is the home of the majority of the world's mountain gorillas.
So we're somewhere Rwanda, Burundi, Uganda. It has to be one of those, in my limited knowledge.
Through DRC.
DRC, of course.
Yes, if you're going to go that route, then you throw in DRC.
Yeah.
Yes, that is true. But let me give you a different hint. That country has a mountain range that makes it possible for the habitation of these gorillas. And the mountains are referred to as the mountains of the moon.
Okay. I think we're still in. Was I on the right track?
No, you are right. You are very right. The geographical area, you got it smart.
Right,
but then I'm going to pin you down and say which country. But so far, you're good.
So far, I'm good. Uganda?
Excellent. Okay. You are absolutely right. It is Uganda. Yes, you clearly paid attention in geography class.
Thank you. I was most anxious, actually, about CT Muga's random quiz.
Oh, dear.
The pop quiz is actually what I was wondering. Will I be the one who drops the standard?
No, you actually never drop it. The way you answered it is the right way to approach it. Is it in this region? I will tell you, yes, it is.
All right.
Yes, exactly. Even if you threw in Somalia, I would tell you, actually, it's not too far away. Yes.
True.
Yes.
Yes.
Another proverb.
Yes.
Do not look where you fell, but where you slipped.
Clearly, it sounds like a lot of wisdom, and I think it actually speaks quite well. Do not look where you fell, but where you slipped.
Yeah.
I think it's a reminder to all of us on the different journeys that we're on. It could be financial planning, career planning, just doing this thing called life.
Yeah.
When things begin to go wrong of a new year and people may begin to think, okay, it's 2025, how do I set myself up? But as we'll hopefully get into, I think 2025 and the way it turns out has a lot to do with the way you spent 2024 and the years before. So my humble submission to the body of knowledge that you are growing with your wise sayings is look behind. I mean, yes, you need to look forward as you plan, but consider the steps that you have taken. And when you are planning a journey, consider each of those individual steps as part of that longer journey, because in the end, it'll be where you slipped that really determines ultimately where you fall and the journey and how it goes.
Well,
you put it very well.
Indeed.
Very, very well indeed. Yes, thank you.
Okay, so we're jumping into 2025 already, Kingori, and many questions. I mean, you start the year off and there just seems, look, I don't think there's anybody who's unburdened at the beginning of the year when you're looking at all these things that need to be done. And now at this point, you're asking us, well, look into 2024 and see where you may have botched things. But at this point, how do you start off into a new year, especially from a financial point of view, where there's so much in terms of demands and burdens? Where do you begin?
Thank you. And I think, first of all, 2024, if we just take a moment to do a quick review of it, if you listen to what people are describing it as, we are sometimes accused in our industry of coming up with financial jargon, but the word "where" that people have used to describe 2024 captures, I think, the broad spectrum. It was a tough year at the macroeconomic level. It was a tough year for us as individuals. We saw a lot of different changes. If you ask the shilling, it'll tell you it was a tough year for me as well. But by the end of it, the shilling came around and things are beginning to look up. As we come into 2025, and thank you for sharing what some of our peers in the industry are doing to help particularly young people acquire skills. I run a program called the Financial Fitness Academy, and when we're starting that conversation, as we will be doing in the course of this year with new partners, we talk to people about the power of creating and building. It sounds a little biblical, but that's not the intention. It's really to ask yourself, what's in your hand? And as you come into 2025, the question is, what do you have available? What can you put to work for you? When we're talking investments, which is the other thing I do at Stanbic Bank, and which we are quite proud of being able to drive that in Kenya, we tell people that when you're thinking about achieving a particular goal, let's say in 2025, I want to grow my savings. It can sometimes be quite daunting if you try and ask yourself, okay, what's the big picture? What's that big lump sum I want to get to? But we emphasize the power of starting the journey, the small steps that you can take. So the simple piece of advice is, you'll be hearing it everywhere, people are making resolutions, but start. We're already into the second, third week of the year. Start. It could be with a small lifestyle change, coming off December with its successes and beginning to say, I'm going to begin to save a little every month, every day. I'm going to save a small amount. So our advice, it seems quite basic, is to start the journey. If you aren't already on it, if you didn't feel you were moving towards your financial goals, is to start the journey. And we have a number of solutions that help people sort of like start without too much of a fuss.
So too much of a fuss for a lot of people would be, you know what too much of a fuss is? Nothing. So, and that's the question. Where do you start if you have nothing, literally?
With a vision. And there's a number of principles we talk about, once again, in the Financial Fitness Academy, and one of them is starting with the end in mind. And it's actually worth sitting down. It may not seem like the most productive economic activity when you have very little to put aside, to just sit down and say, what are my goals, my short-term goals, my medium-term goals, my long-term goals? Because I'll tell you what does happen. When you are not clear about that ultimate destination, or even some of the milestones along the path, this is one has to have some hope about it, that the resources will come. You may not have anything now, you may not have a job as we start 2025, but by the end of the first quarter, you may. And if you were clear that, for instance, my goal, if you were in debt, is that by the middle of the year, once I begin to get an income, I want to reduce my debt, which is a big concern for many people in financial empowerment, is how do I manage my debt? So we're saying define the outcome. Whether you're thinking long-term in terms of retirement, what does it look like? Whether you think in terms of financial freedom, what is financial freedom for you? So I'm saying do 4 or 5 lines about where you're trying to go, be clear about it, so that as you move towards that destination, you aren't unclear. You're not confused about, have I arrived? Am I making progress?
As well, it is at a time that you find even, the Central Bank of Kenya says Kenyans should tighten their belts because the situation ahead will be a bit difficult. Kenyans have to spend more. And as we talk about planning now for the year 2025 with all these things in mind, one would beg to ask, with what? Leave alone even yes.
We some of us sold the belt just to make ends meet.
Yes.
So when you ask us to tighten it, essentially you're asking me just hold
on to it.
Because
it is a very difficult conversation, and one would want to know, how do I navigate with the little that I have, that cannot even sustain me?
No, it's a perfect question. And one of the things I'll tell you, we've been running this program, the Financial Fitness Academy, for about 7 years. Over that time, we've reached thousands of different people. And I will tell you, across the economic spectrum, we're talking about people who are making significant amounts of money, from people who are figuring out, how do I even start to be able to make a living, people who are looking for jobs. The issues don't change that much. But what is required, the discipline is common. The discipline of the millionaire is the same discipline that the person who's starting out is going to have to master. And one of those things is to delay your gratification. And that may mean making a sacrifice now in the near term. So when we move, we've talked a little bit about create and build. So what's in your hand? What skills do I have? How can I leverage them? We are part of a hustler nation. If one takes it in the most positive way it can be taken. We're people who aspire. We can do things. I mean, I can decide now that, hey, maybe I could come back in the afternoon and you guys, we can strike some agreement and make something. But then we move to live and enjoy. And now we begin to talk about your belt. And it's a lifestyle that you've adopted, Derek. It's to say, are you living a life that you can, not a life that's been determined for you but by your circumstances, but by choice you're saying, I will sacrifice now. And this is where it gets complicated, particularly if I can say for the emerging generation, that I will sacrifice now. And we talk, for instance, about a budget, a very powerful tool. A very powerful tool. And I know I'm still touching on this issue of people like, this guy is back on budgeting and we don't have the money to budget. Like I said, you're planning in advance. So we're saying have a budget, be disciplined, because if you're working hard, if you're getting skills and skills are available from different sources, you will find with time the resources come. But for many people, and this is really one of the driving factors behind the Financial Fitness Academy, the resources came before the skills to manage the resources that arrived. So our goal is to get to people that wherever you are, give you the skills, help you draft a vision, a financial vision. As the money comes in, you are ready to administer it so that it can last your financial lifetime.
I hear you talk about the emerging generation, and others would call them the microwave generation. First job, few months of money, I want to get that Audi. Yet that's pretty much just about it. And here now you talk in terms of living within your means, delaying gratification, but they want that gratification here today. So in terms of just talking to them and convincing them, how do you go about it?
First of all, I avoid terms that might cause them to turn on me, like microwave generation, because each generation has its peculiarities, if I can use that word. I don't know if that's any kinder. But I think it is to say, one, if you look at the people we admire, wealth that comes overnight, in a hurry, unexplained, in my short experience, has a tendency to leave in the same way. It will leave you overnight. It will leave without a goodbye, and it will leave you wondering, what is this about? The journey of financial fitness is also about sustainability. So we're telling people that, are you working for a 1 year? Is 2025 as good as it's going to get for King Ori? If so, by all means, live like that is a year. But if you are thinking longer term, you're thinking about in 5 years where I'll be, particularly for a young person, I'll be starting a family. I'll be educating myself and my family. I'd like to move. I'd like to travel. These things will take time. And the way I think to communicate with those who have a challenge visualizing those longer term opportunities is to say what matters to you. Motivate yourself by the goal. You might be thinking, okay, I'd like to live in another country one day. I'd like to retire in a gated community, in a leafy suburb. Focus on that and then work backwards. Remember we said start with the end in mind?
Yes.
Then you can, I think people are okay. If you show me the steps, then I can climb this ladder. But if you're not clear about how people climb it, and unfortunately sometimes the stories we get are about the outcome, not the process. So our job is to remind people that there is a process. We normally invite people to come and tell people about that process. Share your journey. And I think any generation, not just the emerging generation, will relate with a story that they can see. This is how the person got there.
True, they can. In fact, the very description or definition that one of the definitions that is given to this generation is probably where we ought to start. Why do you think that they appear, generally speaking, to gravitate towards immediate gratification? Why? Because if we can find an answer to it, and the answer doesn't, we don't need to think it, we just need to ask them, and they'll be able to tell us. But it doesn't start with the job. Ask, where do these young people start having this idea? Because it's when I get the job. So when you get the job, you see the manifestation of the process of thinking that they've had.
Yes.
So perhaps this conversation ought to take place before they get the job, when they still study, when their thinking process hasn't solidified,
Exactly.
And so the options, the Audi stays the focus. The Subaru stays the focus.
Yep.
Yeah.
Yes. But you say, life isn't about the Audi or the Subaru. How do we balance this?
100%. I take you back. Let's turn the focus on ourselves. I recently participated in a conversation with younger people, and I realized they're not so big on advice anymore. They want you to share your experience.
Yes.
Talk like a human being to me. Don't talk like you're teaching or lecturing
Don't talk
me.
at me.
Don't talk at me. Think about your own journey. What did your parent or guardian teach you about money? If your parent the money appeared out of their wallet, probably from a concealed location, presented to you, no discussion around the journey it took to create that, it would be hard to fault you for beginning to think you skip steps and the money appears and I begin to spend it. So we're saying the conversation needs to start not even at school, at home. Teach your children. We have a financial fitness academy for kids as young as 6 or 7. Begin to teach them about money. When you understand how this thing is created, you'd be surprised how many primary school going children in Kenya have not gone into a bank to just understand that money does not pop out to anyone who queues long enough. That there's a process to it. You deposited it, then you withdraw it, then you spend it. So the view that it's something that can happen very quickly, I think can be countered with the knowledge and the experiences that conversations like this can create.
You know, we have these conversations with institutions that deal with money in different forms. Banks maybe, but also insurance companies. And we always ask the question that we're now seeking to answer, and for which you've actually provided an interesting perspective. The academy. You see, how do you expect to have a saving culture when it hasn't been taught?
Yes.
Where do you think it's going to come from? If the vast majority of the people who live in this country live from hand to mouth, and so they're busy thinking of where do I get so that I eat today? Saving doesn't feature, and yet it can. Even with the little that you have, it can.
And I hear you, City, speak in terms of financial literacy that needs to start from a very young age.
Yes.
Something that ought to be a continuous process.
Yes.
And as well as a country, perhaps we need to have this discussion throughout and start it from a very young age so that as a country, everybody knows the process of getting money and investing it.
But you see, Dennis, we have a culture in this country that flies in the face of what we're saying. There's an entire group of people who have introduced a culture of magic thinking where where you need to find yourself in a particular place and the word deal, and then you throw in the word hustle. A lot of it has to do with just pure theft, but it means you do not work adding value so that the value is what gives you money. You just have the money. How?
Where does it magically appear from?
Yes, and that is a culture that we have.
And it's a culture that is catching up because everybody thinks, nitapata tender.
Yes, exactly. And it fights because the discipline required in formulating the sort of mind that plans, we're not even talking money yet, just plans and says, this is what I'm going to do and this is how I will do it. We have a laissez-faire mindset where people just think deal. How do I get into a position where I do this and press this button and as
voila.
do say voila, money arrives at me. And they believe that's how it should done. How it should be done.
100%. I mean, if you listen to what people are talking about these days when it comes to money, there's a book, The Psychology of Money. Everybody who is trying to improve themselves these days is talking about that book. And it's about the mind. It's about the software when it comes to thinking about financial prosperity. It's about our culture. And that's why we organize a Financial Fitness Academy in the way we do. We first start by talking about how do you make your money? Are you clear about the skill set, the value you bring It used to be about time. You clock in 8 o'clock, make sure you're still there by 5 o'clock, you will be paid at the end of the month. Now people are talking value. Then we've talked about how do you live and enjoy. Then we say, think about your lifestyle, adjust it appropriately. And we continue to cycle through all the way to planning for the future.
Right.
3 elements when you're talking about financial health, because I think that's the other point, and it comes through in the report. There is financial literacy, which is about knowing. There is financial health, which is about the practicality of being able to do. Is are you able to manage your today? And financial institutions are there to help you navigate your today. But can you deal with risk? And CT talked about insurance, and we all know about our insurance penetration. Everybody knows Kenya's insurance penetration is low.
3%.
3%. Everybody, you ask. But what does that mean? It means that we are one risk away from being in financial ICU. And then there's a future. And I think you have made a valid point. Until the hardware, now we talk about the economy, you talk about inflation, you talk about the opportunities, the unemployment rate. Until the hardware also kicks in, it's very difficult to plan for the long term. So those are the 3 elements I think the report brings out that we also are saying we can address. We've been doing this. We say Kenya is our home. We drive our growth. And the way to do it, I think, is to help people manage their today, help people deal with the risks that come, and also set them up so that they can begin to invest and plan for them. And we're happy to have that discussion. Come into one of our branches, talk to one of our advisors, and we will see. We're not promising that we can once again magic away the problem, but we can have a discussion about debt consolidation. And the other thing to do really is to say, once you've consolidated it, is then take on debt that you can manage. Debt needs to be sustainable. Debt needs to be allowing you, one, to meet your current commitments, but also to plan for the long term. So that would be what I would advise.
This thing that you've just said makes so much sense. But do you tell it to your clients? Because the institution you work for, I'm certain, also has a debt portfolio of people who have non-performing loans. When someone takes the loan, for whatever reason, because there's a criteria you must meet before you're given the money, is there that continuous follow-up and conversation with this person? So that, because many people will tell you it's COVID. When COVID happened, a lot happened. And actually, indeed, a lot did happen. But now the conversation of, okay, this is what happened, all right? Part of what you owe us has to do with the interest that we've charged you. Now, let's have a conversation about how it is we can sort this out, okay? Let's start with, what do you have? Okay? That question, because my experience has been, the bank tells you what they want. Not ask the question, what do you have, so that you can begin a conversation around what you have. Start by just paying off the interest. Let's leave the principal for a side. The interest may be easier to pay. Now, you see, the moment that conversation begins, it means you have engaged and you're making progress. And then there's a knowledge of, if something happens again, come back, let's talk. Does your institution have this conversation with its people?
I think it's a good challenge, and I want to give you a very honest answer about how this journey began. When we started the Financial Fitness Academy, you'll be interested to know that our first target audience was my colleagues within banking.
Okay.
Because we realized there was a challenge. There was a challenge. You're in banking, you have access to facilities, you are a banker, and that carries a certain connotation in terms of how you should live your life. And we realized there was a problem. If you yourself are struggling with properly managing your debt, with not over-leveraging yourself, that was an issue. So we actually started this journey in 2017 by talking to all our 1,000 plus colleagues. And every single colleague of ours, and on an ongoing basis, those who joined the organization, has gone through the Financial Fitness Academy. We like to say you're certified to manage your own finances. And at the heart of the wealth framework, when we talk about that, how do you make your money? How do you spend your money? How do you save and invest your money? How do you give back to society when you're talking about black tax and things like that? How do you balance that commitment? And then how do you plan and protect? All of that, at the heart of it, and I will share with you as I leave, at the heart of it is you and your family. Our belief, CT, is that you educate the individual. You've kind of sorted half of the problem. Because I'll be honest again, the bank is in the business of lending money. So we will sit down with you.
You buy and sell money. That's what you do.
We buy and sell money. So we will sit down with you. If you qualify for X amount, who are we to tell you don't take it? We will take it to you. But the other thing I want to tell you and your listeners, banks, I will tell you, reputable banks, certainly Stanbic Bank, is not in the business of selling your home, selling your car, or chasing you to pay your debts. And because of that, the Financial Fitness Academy, what we talk about in terms of financial fitness, is inculcated into everything we do. We talk to our corporate partners, we talk to individuals, we talk to students, so that we can bring you on board in fighting form and in fitness to be able to manage your finances and use the facilities that are available to grow yourself in a sustainable way.
Now, when you still talk about debt, you bring up a very interesting subject, which is pretty much how banks work. It's sell and buy and buy money. But now let's talk about, I am coming to get debt from you. I've applied for one. Do you have conversations in such that you are so clear on the terms and conditions, not the hidden terms and conditions that no one ever reads, but in terms of this is what you're giving you, this is what we expect. In the event that you are unable to pay, we will go this direction, or we can still sit and agree on how we can manage this. Because many people find as though I can just apply and go. The rest to discuss when the time comes. But having this conversation before even depositing the money that one has requested for.
I think I hear you, and it's the same challenge that's coming back to us on the debt issue. It's kind of like what's sort of like putting money in the hands of people on your first salary. Here's the money, go and spend it, do what you will. We do have a very robust framework. So we have a full risk function. It's interesting that the function that looks after whether or not we're going to extend a loan towards you is, people know it outside as credit, but it falls under a broad category called risk. And risk is not necessarily a bad thing. Risk is saying, have you understood your situation? Have we understood your situation? So sometimes you will hear somebody say, I've been trying to get a loan. I've been trying to get a loan. I go here, I go there, I go there. And I would hazard to say that even no is an answer. When you're getting that feedback that maybe the proposal you have is not a very good one, take it as feedback. I actually know people who say if a business plan satisfies a banker that they are ready to lend to you, that is a good business plan. You can do a lot with that business.
Why? Because you're so difficult to please?
Not really so difficult to please. It's because we are an objective party. Because we're just saying, you come and told us you want to start a business, and then we're looking at your cash flows, and we're saying, we think you're going to you'll begin to see you breaking even in 3 years. It means the first 2 years will be struggling with debt. So what we say, we may not say don't start the business, but we say we will not extend the loan. You go away saying that bank is difficult. They're not willing to lend. But what we've given you is valuable feedback.
Yes, but couldn't it be more valuable by you? Instead of saying we won't give it, you say, look. No, let me rephrase it.
Yes.
Do you tell people what they need to do in order for you to give them loans? Apart from personal loans, where everybody knows you need a salary, you need a pay slip, and then you need a guarantee from the employer. That one is straightforward. What about somebody who works with a contract? What about someone who does odd jobs? They are young, they've just started, but they have an income and it comes in. Sometimes it's haphazard, but it comes in. What about people like myself who are clearly not in their first youth? Lastly, do the policies actually meet the needs of the Kenyan? Because you will have bank policies. And if you talk to banks, they'll tell you our policy. Okay, we get it. You have a policy. It's other people's money. We get all that. How do you determine these policies? Are they based on meeting the needs of the citizens of this country, or is it a policy that came from somewhere and it serves a different interest?
It's a good question, very good question. And I'll answer it in two ways. One of the things that we've been very big on, so we've talked a lot about the Financial Fitness Academy from the lens of the individual. We run a very similar program, Financial Fitness for SMEs. Now, one of the questions I get asked by many young people or people in fledgling businesses is, when we come to the bank, you ask us for audited financial accounts, these things. It's mneka vikwazo. It's like you really don't want to lend to us. Do you know what your the easiest financial statement to get and to build over time is it's a bank statement. So one of the messages we've been taking to SMEs is when you're involved in your gig and you get paid in cash, put it into the bank. And we're not saying that just because we want to have your money in the bank. It's when you build that relationship with a financial institution that we can see, yes, your business is young, you haven't got structures, but you have a discipline. When you get paid, it goes into the bank. When you pay, we see it coming out of the bank. And then when we sit down to say, fine, you're not yet at a mature level where you have audited accounts and this and that. But that alone. So what I'm saying is, I think banks, and certainly that's something we're looking to do, and even through our foundation, we're working with partners, like-minded individuals to say, how do we raise the standard of these? I mean, SMEs are 90% of the employment in Kenya is down to SMEs. How do we help them? And I think when you talk about being relevant to the Kenyan economy, saying Kenya is our home and drive our growth, you cannot be relevant if you're not addressing the fact that the majority of our employment is in the informal sector, and then create tools, create solutions that would allow them to work even within the structures of a bank, but to achieve their objectives. So it's how we are approaching the challenge.
What is the percentage of penetration of individuals who have bank accounts in this country?
I don't have that number. But of the report that we have, and I think give credit where it's due, financial inclusion, courtesy of mobile banking, and the ability to have a mobile account, call it M-Pesa, call it what you will, is over 90%. So I can say there the challenge is being addressed, but in terms of actual bank account penetration, it's something I'd have to look at.
Well, it's around 60%,
Around
so they say, or thereabouts. Some say 70, some say 60. But the point is this. Every time we talk to people in the insurance business and people who, and insurers also call themselves financial institutions, okay? Or people who are straight out bankers like yourself, is the story of the future. And we always bring in the discussion of young people. And the question is, the policy and the plan that you have to ensure that these young people understand what you offer and how they can benefit from it. Yes, the academy goes a long way. But once they open that account, there's what you call continuous education. Okay? Where, and I know because banks send you, they tell you all sorts of things. They're always sending you messages, most of which I personally don't read. Okay? No, I don't. If the bank thinks in terms of its future, the future is not in people like myself. Ancient crocodiles like myself are not actually the people you want to focus on. You want to focus on people who, rightfully so, have their entire future ahead of them. Question. The policies that we spoke of that you say are Kenyan, given that we have a youth bulge, does it actually seriously address this? And is there evidence to show that having addressed it, the numbers of young people who open accounts will be the proof of this particular pudding?
Challenges galore. I will have a lot to take back to the office, but let me give you a practical. Like I said, on this subject of, there's a lot of talking we can do about financial literacy, interventions in the market. Let's talk about what actually are we doing. When I joined this organization over 7 years ago, I was working in investments, and we had a financial fitness academy. And I say now, not as something we would want to perhaps shout about, our focus was the affluent market. We were talking to people who had millions to invest. Our products were designed for somebody who has an extra 2-3 million, who is ready to put it away and put it to work. As we speak today, and as of going into the end of 2024, our fastest growing investment product is a money market fund account that we launched last year. Shall I say due to public demand? Because people would walk into our branches and say, I am interested in investing, but I've heard rumors that you need millions to invest. And we said, no, we will come up with a product that is competitive, is giving you a return like any other investor in Kenya, but you can get into with 1,000 shillings. And I appreciate 1,000 shillings. We're not saying we have hit the floor, but we have tried to address the fact that if we do not put solutions in people's hands that are simple, easy to understand and accessible, we are going to be limited in our impact. So I think I take the challenge on a continued push, and that's why I welcome what our peers in the industry are doing. I actually come from a team in the bank that is insurance and asset management. So even as we talk about investments, we talk about banking, we're talking about how do we address the challenge around insurance. So today, that is our answer to the question of how we can get more people investing, more people included. It's by lowering the threshold on investments like our money market fund in Kenya shillings. You can also look at it in dollars, and get people realizing that we're not actively trying to exclude you from working towards a financial future.
When you talk to people who are in my age bracket, there's the assumption that there are oodles and oodles of money stuck away somewhere, some under the mattress, which they will happily give you to invest for them. Anyone who's done business will say today you may have that money, tomorrow you won't. Something can happen. Why is it? No, let me repeat the question. Let me rephrase the question. Do you have, just as you have for young people, you only have 1,000, do you have the sort of policy and plan for people who are 60 and above? Let me put it at 55, people who are supposed to retire. That's a completely different discussion, though. So that, because we are living longer, and we're getting to 80 and we're still alive, and we can still tie our shoelaces.
We do. True. And life hasn't ended.
No, far from it. We are not just about to make an exit.
We do. And I'm actually it's nice because I know we will at some point be wrapping up this conversation.
Yeah.
I'd like to make it clear that we've actually cycled through 4 out of 5 of the critical elements of the Financial Fitness Academy curriculum. We've talked about creating value, building something. We've talked about managing your lifestyle and live and enjoy. By talking about products like our money market fund, paying a competitive return, accessible, it's a transactional amount, you're not locked in, so you still maintain your liquidity. It's about saving and investing, growing what you have. We didn't spend too much talking about how do you give back, but I just like to tell everybody, I think it's everyone's responsibility in agreeing with somebody we quote on the program to give back to society. But what you touch on, CT, now is planning and protecting. We, as part of the Standard Bank Group, largest bank on the continent by assets, it did not happen overnight, it's 162 years and counting, are also in corporate Liberty Life. Liberty Life is an insurer. So we do have a full-fledged range of solutions available for people who are looking to build endowments. You're approaching retirement. You're worried that I've been getting a salary. Now I have a lump sum or I have some money. How do I ensure, especially if I don't have the discipline of administering a lump sum to take care of my golden years, let's not call them twilight, my golden years, we will be able to give you a solution that says, fine, put the lump sum, what you have here or will work towards, and then have it draw down over time. And I tell you, there is power in being able to keep that going, because we do get institutionalized. We do get institutionalized in the thinking of, let me get a regular income every month. So we believe by being a integrated financial services institution, we can bring these capabilities. I can talk to you, and I hope you invite my counterpart at Liberty. He's called Eric, and he will tell you now from the insurance point of view, same discussion. He calls it Mind My Money, I call it financial fitness, but we're saying one thing, that you need to drive the journey. A bank, an insurance company, they are petrol stations, they are utility providers. But I think for too long, if I was to sort of like say what the goal is, when you go through the program, you enter with a lot of questions, you exit with a lot of answers, but guess who's answering? It is you who has been equipped and understands with our help.
I'm glad you've given the example of a petrol station. Do you know what they do now? They don't just sell you fuel. You can have your hair cut. You can do your shopping.
You buy a drink there.
In fact, you even wonder why it is you need to go elsewhere.
Exactly.
And all you came was for fuel. So are we saying that Stanbic has a similar approach? We come to you and they're all these solutions.
And everything you need, essentially one-stop shop can be gotten.
It is, and thank you for helping me sell the story more effectively. People used to call them financial supermarkets. Now we're calling them integrated financial services organization. We incorporate, we're saying from your day-to-day banking, we're saying as you grow, if you're thinking about private banking, which we relaunched in the course of last year, because people have aspirations. You're starting somewhere, you're looking to go somewhere. When you talk about travel, what does it take to be able to travel effectively? When you're talking about insurance, we run Stanbic Bank Assurance Intermediary Limited. So we have both an agency, meaning that we can talk to other insurers in the market, and then courtesy of our relationship with Liberty, we have that ability to actually show you what we underwrite ourselves. So the idea is that when you bank with Stanbic, when you're part of us in the Standard Bank group, we are progressively trying to answer all the questions that it takes to take Derek from Nairobi to Mombasa. If that is your destination, take care of your stops, keep you fueled for the journey, and once you get there, be able to enjoy whatever took you to that destination.
Great tools to plan for 2025, I'd say. It's just that, it's a good time to have this conversation at the beginning so you can pick up things as you go on through the year. Gathinji is the head investments and financial fitness at Stanbic Bank. Thank you for being here this morning. And I think, sometimes you overlook the importance of some of these things, but it's great to have you and giving those pointers, and definitely conversations that need to continue. Asante Sana.
This is the Situation Room, the only way to start your day.